Morning, welcome to Ainsley News. It's Monday the 2nd of November. Welcome to the new month. Some big news happening tomorrow, as you're all probably aware, with US elections looming. Trump or Biden, gold the likely winner. You may or may not be aware of a little election taking place tomorrow. The last one saw a wild whipsawing of markets, including gold. Whilst that was the shock win, with the majority now believing Biden will win this time, there is a very real risk of Trump bringing home another shock win. This means the market has literally priced in one scenario when another is very possible. There is also the issue of a protracted legal battle and or broad-scale civil unrest and further social dislocation. This election, maybe more than the last, could see heightened volatility in markets as the news unfolds. One analyst who publicly called Trump's win last time and recently also went public with a high conviction call that he will win again is Jim Rickards in terms of what he sees for gold in this election. Regardless of which candidate wins, gold will also win. If Trump wins, it's reasonable to expect additional deficit spending along the lines we've already seen. The Fed will have to monetize this debt to keep interest rates from rising. That debt monetization will increase inflationary expectations, which drives the dollar price of gold higher. A Trump victory may also produce more Antifa-style violence in reaction, which also increases the safe haven appeal of gold. If Biden wins, not only will there be more stimulus-style spending, but there will be enormous pressure to enact the Democratic Party platform that includes guaranteed basic income, free healthcare, free tuition, free childcare, open borders, and the Green New Deal. These programs will cost tens of trillions of dollars that will also be funded by huge deficits and debt monetization by the Fed. The inflation signal will be even stronger under Biden than Trump, and gold prices will rise predictably. Finally, a disputed outcome in which the Electoral College is a 269-269 tie, or in which results are not final because of disputes over mail-in ballots, will certainly spark a rally in gold as a safe haven in tumultuous times. If we look at US equities markets right now, we remain in that eerily similar pattern to what existed in the lead up to the Great Depression. Check out this chart here from the Dow Jones Industrial Average, around 1919 to 1932 shown there, with a comparison chart to 2009 to 2020. Matching day for day there by the look of it. Wow. Something will be the trigger that causes this big unwinding of this bubble. To further illustrate the concentration of this bubble, it's interesting to compare the tech-heavy Nasdaq with the small-cap equities Russell 2000 index. The latter is seen to be more illustrative of the real economy as it strips out the concentration of the FAAMGs. In terms of the prick, Biden has been on record that he will heavily tax the big tech companies, a message seemingly not heard or disregarded by all those piling into them. Maybe that is just because that is blind, passive money, and maybe they are still seen as the least dirty shirt in the basket regardless of sky-high valuations. Either way, that chart shown previous in the context of the next shown chart looks decidedly fragile as the ratio of the Russell 2000 to Nasdaq reaches near all-time lows and set to retest the tech bubble levels that saw the Nasdaq fall 80% thereafter. Here's that chart there showing the Russell 2000 versus Nasdaq. Fragility and high volatility are not great bedfellows, and again, either way we look, likely to see a high level of volatility in the coming days and maybe months. Remember, there was no stimulus package passed before the election, and now there won't be the chance for the new administration to pass one before February next year. The US is getting smashed right now with the second wave of coronavirus, and there is no safety net there for months, coinciding with possible heavy civil unrest. It's definitely a cocktail best watched from afar and with your wealth well hedged. We say it some days, and again, we'll say it today. Our tagline at Ainsley is balance your wealth in an unbalanced world. So, for all things physical, ainsley.bullion.com.au. For all things crypto, ainsleywealth.com.au. If you're interested in our cryptocurrency built and backed by Ainsley and stored at Reserve Vault, check out goldsilverstandard.com. We'll catch you tomorrow.